ado, I'd like to hand it over to your host and facilitator for today, Ryan St. Germain. I know a lot of folks in this chat are familiar with him, but if you're not, he's the founder of Indigenous Tech Circle, a powerful network of over 120 Indigenous tech leaders. He's also an executive and serial entrepreneur based in Vancouver, BC. We're really happy to have him today. Ryan, I'll hand it over to you.
Thank you. And I'm just frantically throwing some questions into the chat here for folks. We were setting up a poll on another Zoom channel, but we'd really love to know a little bit more about where folks are at. So if you have a second, just maybe like take a look and see, yes, actively raising, no, but planning to, and then maybe also just sharing a little bit about kind of like how you're fitting into the ecosystem. I know we have lots of founders on the call. Also, we've got some venture capital folks and ecosystem supporters and such. So love to just sort of by way of getting to know everybody on here as well too. That would be fantastic. So I guess I'll start with, hi, I'm Ryan. I'm calling in from the beautiful traditional, ancestral, and unceded territory of the Musqueam, Squamish, and Tsleil-Waututh nations. And I'm very honored to have been born and raised here and to be able to live and play on these lands. I am an uninvited guest here. I'm a mixed settler, Red River Métis heritage, and so my Indigenous ancestry, my Métis ancestry, is from Red River originally, and then a lot of folks in Saskatchewan now around Fort Capel and some of those areas here. So very excited to be here. We have a great turnout for the event. I did notice on the event that we have a lot of Indigenous and non-Indigenous folks on the call. So I just want to say that we're really excited to invite everyone in, and it's great to have everyone here. I feel like most of this information is going to be highly relevant to folks raising in general terms. Just to note that we will be prioritizing questions that are focused more on Indigenous-led entrepreneurs and scaling those businesses. All right, so thank you. And with that, I think, we've got some amazing speakers here, and I'm not going to do them justice. So I'd love to just have everyone kind of pop on and share a little bit about themselves. So we've got Allison from Spring, and we've got Devin from Raven Capital, and Andrea as well too, supporting from Spring too. So please maybe share. Andrea, do you want to lead us off, and then you can play popcorn to who you want to chat next.
Yeah, absolutely. So my name is Andrea, and I work at Spring as an investment project manager. So I deal with a lot of the programming, program design, and just kind of how can we support investors, how can we support founders from all diverse backgrounds. And I will go with Allison.
Thanks, Andrea. Hi, everyone. Allison here. I also work for Spring. I'm Spring's Chief Program Officer, and I'm located in Toronto, although I make it out to beautiful BC all the time. Super excited to be here. This topic is near and dear to my heart in that I love supporting founders as a founder myself who went through all the trials and tribulations of raising funds to support a business, and I had no idea what I was doing, and no one helped me, and I didn't know where to turn for anything. I love sharing all the mistakes that I've made and all of the newfound info and knowledge that I have so that you hopefully don't do what I did. And with that, I will pass it to Devin.
Hi, everyone. So great to join you today. And I do just want to acknowledge that there's so much wisdom in this collective virtual room. And even though there's a few panelists that have been identified to share their insights, I really hope we can keep this as an open circle where everyone can contribute and offer what they've learned. I'm here to learn as well. So as Ryan mentioned, I'm Devin Crater. I work for Raven Indigenous Capital, and I'm joining you very gratefully from the Musqueam, Squamish, and Tsleil-Waututh territories here in Vancouver. And my path towards Raven has been sort of a winding, meandering exploration through the world of finance and how we can make it a more inclusive system. And so that's taken me predominantly through emerging markets, working with fund managers and portfolio companies to support impact strategy along commercial growth. Then over to a pension plan to spearhead ESG strategy across asset classes. And then over to Raven, where I feel truly honored to be working on what I think is the most important investment thesis across Turtle Island, which is to back Native American and Indigenous founders with culturally appropriate financing and business support. We've been operating for 5 years, have invested in over 20 companies, including names like Virtual Gurus and Run With It Synthetics. And so we have the privilege here as investors to have a front row seat to Indigenous innovation and supporting the Indigenous economy. And so really open to where the conversation goes today, and hope you have some tough questions for us. And yeah, just gratitude to Ryan and Bradley for hosting. Thank you.
Thank you. All right, so I'm starting to see some things populating here, so that'll help us inform as we go along. Thank you so much. And if anyone else wants to contribute their kind of what they're looking for from today, that would be super helpful. And but with that, we'll kind of kick it off. And I'm going to frame things quickly before we get started, because I've noticed that sometimes there tends to be, just in general terms, I think there's often a misconception of like what venture is and what venture isn't. And like in terms of seeking funding, there's so many different mechanisms and so many different types of funding. And often you really need to work backwards from what it is you're trying to achieve. Are you trying to grow a business to a very large size? Are you open, is this something that is something you want to have for the rest of your life? And is something that is an ongoing thing? Do you not want to scale up? Because being in business is deeply personal, and how we choose to go about it really is a reflection of who we are. And so for me, I think there's no right way to do business. And, there's a lot of opportunity no matter what path you go down. So one of the things I wrote recently to extend upon that, as I was talking about, it's been floating in my mind quite a bit the last little while, about risk and how the same risk is not equal. So depending on your circumstance, depending on, there's a very big difference for me. When I started my first business, I knew I was going to have a place to eat, food on the table. And, I was even given some financial support from my dad in the beginning. And so that risk for me is very different from the same person who has, single parent with 2 kids, that's got no backstop, and you could end up living on the street. So I think in terms of context, it's like, how do we get from here to there, and what is the right type of business for you? It's almost like disqualifying yourself sometimes from venture capital. It's like, is this the right path for me? And so yeah, I think with that in mind, like and just sort of the friends, family, and fools is kind of a ridiculous statement sometimes within Indigenous communities, right? Like, just often there's not a bunch of folks that can throw $10,000-$25,000 at somebody who's at very early stage. And so yeah, just to frame a little bit on the conversation, and like, how do we get some more of those companies to scale, but also just understanding your options, what is the right path for you. So I guess for a first question, like, what are potential sources of investment that are available out there, or capital in the early stages of a company? And what are some of the options available? I guess we'll start with. And Devin, do you want to lead us off?
Sure, happy to. And I hope maybe Ryan, in a future question, we can kind of unpack what are some of the considerations around which forms of financing you pursue. But I think there are 4 main categories. The first is the best, which is cash flow and profits, because that doesn't require any dilution or security or convoluted grant application processes. I'm pointing to some of the disadvantages of the other forms of financing, but of course they come with their advantages too. So the other 3 forms of financing being debt, equity, and grants. I guess I'll get into just before I get into specifics, I do want to pick up on a thread, Ryan, that you're sharing, which is something we're very present to at Raven. Raven is an Indigenous owned and led impact investing intermediary. And it's very important for us that the entrepreneurs we serve feel that they're represented in our staff and in our advisors, and the way that we show up and support founders who have many times walked in the same road and gone through some of the same challenges as operators or as investors. And what I would share is absolutely there isn't that kind of friends and family social safety net available to most Indigenous founders. And so what we found is, how do we find these other opportunities, including at Raven, to provide that seed stage capital, or in times earlier stage like pre-seed. And so that's, I think Raven is one effort to provide capital to the ecosystem, but there need to be many, many more. And I know, Ryan, I don't know how much you can share, but there are other players in the ecosystem that are developing investment theses around this, which is really, really exciting and really vital. But yeah, to talk a little bit about the forms of financing, and maybe it's helpful to talk about some names, many of which I imagine will be familiar to some of you, and would love for you to put other names in the chat so that we can facilitate this knowledge sharing, because it still is very much so a fragmented system for founders. It is not an easy place to navigate and to find folks, whether that's in Canada or stateside. And so we need to do as ecosystem partners, and like whether you're at Spring and working through acceleration, or you're providing capital, we need to do more to support founders about where they're at and how we can connect them to the people that they need to get them to the next step in their journey. So one place that I point to is pitch contests. There are a number that are focused on diverse, sometimes women is the lens, as well as Indigenous founders, whether that's like Ernst & Young, there's Sheboot, the Forum has applications out, I think due October 24th, Angel Forum, the Firehood, Startup Canada, League of Innovators, Spring. I've missed many, but those are great resources, not only to receive prize money if you're at the initial stages of your venture, but also to receive kind of wraparound support, a network of advisors and champions that can help you get to the next level. Debt providers, a number that we've kind of worked with more closely that I know have either Indigenous specific teams or have done, I'd say have a very good reputation with Indigenous entrepreneurs, are like Futurepreneur, Community Futures, Coralus. We have the Indigenous financial institutions and economic development corporations, as well as some of our crown corporations, BDC, EDC, Farm Credit Canada, banks and credit unions. That would kind of run the gamut of some of the debt providers that are, I'd say, many times specifically developing strategies to support Indigenous folks. And then we have grant funding like Pocketed, Granted. One specifically that I really like to call out is at Grand Challenges, the I3 initiative, as well as in the venture capital landscape with equity providers. Raven is one that's focused on Indigenous founders, but I believe there will be more that have that thesis. And then there are many that I'd say see diversity as a commercial imperative as well. And that can be groups like the 51, Stand Up, and Sandpiper that focus on women funders. There's also impact investors like NBC, Pollinator Fund, Amplify, as well as sector-specific funds, which I think you're going to get a different set of expertise and skills speaking to those individuals. This is not just about you selling your company and your team, but just as much, what do you like about the investor? Are they values aligned? Are they able to provide capital that is not just financial, but also human capital, social capital, connections to corporates, distribution channels? Do they have experts that have subject matter expertise that you need if you're building a hard tech or company? And so there's a lot of questions that you should be asking investors as well. Sorry, Ryan, I'm probably pouring into the next question, but it's definitely important for you to do your homework and for you to assess investors just as much as they might be doing homework on you. So with that, I'll pause and hand it back.
Thank you. That was amazing. That was a really great summary of available resources out there. Allison, is there anything you'd like to add to that one in terms of resources or thoughts?
Devin's amazing.
That
was very comprehensive.
It was pretty good.
It was pretty good. All I would say is just one, there's a lot that Devin said that I was like nodding. I was like, yeah, And one thing that really stood out to me was just finding that whether it's capital, mentorship, whoever you're working with, making sure that their values aligned and that they care about what you care about and they have your interests at heart. As I mentioned, I made every mistake, and that was probably the main mistake I made, was thinking that like all money is great. And just because I had an opportunity to access funding doesn't mean that I should have. So I wish, Devin, that I knew you a few years ago and you gave me this spiel, because I would have been like, oh, okay, okay. And I have nothing other than what Devin said to add. That's it.
That's amazing. Yeah, it's so interesting because, you know, if you don't know what your values, mission, and goals are in terms of your business and you choose funding, then the funding ends up dictating where you go. And so it can be a really rough ride if you don't have clarity around that early on. So I think that's a really great, yeah, thank you. That's amazing. Well, and maybe to Allison, to kind of carry on with that, what should first-time funders or founders consider before pursuing VC funding? And maybe even let's incorporate like angel investing on that, because, you know, angel investors is going to be looking towards, you know, a similar model so that they can get the returns they're looking for.
Yeah, great question. And I think starting with angel investors would be great. Again, wish I knew this, and that angel investors kind of, their thing is like, let's get in early stage, let's invest in startups that are a little bit more risky, and let's take the time to make sure that these founders really understand the process and what's ahead. And I didn't know angel investors existed. So now that I do, or even just traditional venture capital investors, what I would say to any founder who's preparing to speak to them, or just like things you should know, is kind of what Devin alluded to, in that it's doing your due diligence is probably first and foremost, in that knowing who they are, who they've invested in the past, maybe who they're connected to, and that their network may be useful to you in terms of like connections, mentorship, whatever you're looking for beyond capital. It's not just about the money. And I think I wish I really gave more thought to the fact that accepting money, or the opportunity to get money from somebody, now pending the terms of the deal, enables them to call the shots, to make decisions about your company. And I know personally with my business, it was very near and dear to my heart. There was a lot of literal blood, sweat, and tears that went into it. And so when I did accept investment, I didn't realize that I was now welcoming these people to make decisions about my business. And I didn't like it. I'll be honest. We weren't on the same page about a lot of things outside of the money. So it just can't be about the money. And I think doing your research in advance, I did a lot of, my friends call me Inspector Gadget. If there's something to find out about you, I'm going to find it out. Go on their Instagram, go on their LinkedIn, go on anything that someone, whether it's an investor, an angel organization, a fund team, do some snooping around and see who they are outside of the conversation about money, because it'll tell you a lot about a person. And specifically for Indigenous founders, I do see programs or funding opportunities that will often say like, this program is prioritizing Indigenous founders. And I'm like, great, but how are they doing that? So if you do see that, if this is not coming from like an Indigenous-led organization, someone's claiming to be for you and about you, ask them how. Ask them what services and supports are they offering specifically tailored to you. Or what research or homework have they done to identify the needs that you have? Because if they haven't spoken to you or someone from your community, it, to me, often just comes across as being performative. Or maybe they have a funding goal or metric box to check, and I'm not a checkbox, neither are you. So I just encourage you to do your homework. Don't be afraid to ask questions. There literally are no stupid questions. And once you have all the information, just to trust your gut. Like, that sounds so hippy dippy, but it's true. Trust your gut, trust your instincts. If it doesn't seem right, or if it seems too good to be true, it might be. And that's where I would lean on like friends, family, people who have experience, people like Devin, and organizations like Devin runs, that may be really good to just bounce ideas off and make sure you're headed down the right path.
Amazing. And you just made me realize, maybe I give context as well too, is that in case people don't know what angel investment is, as you were saying, like you didn't know what it was back then. And so angel investment's often like, it's a high net worth individual, somebody who's often been a startup founder prior and has had an exit or something like that. And they've just had a highly successful business and they've got money that they are open to putting into new ventures. And oftentimes it's a combination of wanting to support the ecosystem and make returns. And so that can be an interesting source of funding early on. And Allison, just to add to your point as well too, on terms of doing research, the other thing is to find out who they've invested in the past, and not just stick with who they give you, right? Like if you can gain any more insights on the call, like maybe just say, who did you invest in over the last year? It'd be great to see a list of that. And then maybe of that, give me, would it be possible to get a connection to 2 of them? But then call the other ones, right? Because those are the ones where you connect with them on LinkedIn. And other founders are always like, other founders are an amazing source. Like if you message a founder that's gotten funding from somebody else, most times they will respond and say, hey, this is the 411 on this. And so a great option to check. Amazing. All right, cool. Devin, anything you wanted to add to that one?
Sure. Yeah, happy to chip in a little bit, but I just love what Allison shared. It's very true, and definitely doing your research, and like Allison said, folks are very forthcoming. News travels very fast. It's a small ecosystem. And so, reputation is everything for capital providers and ecosystem support. So I definitely know there's folks out there that maybe externally presenting as supporting Indigenous founders, and in reality, you look at where the capital has flowed, and there's not much to show. And so definitely, unfortunately, we have to do a detailed examination. And so, yeah, support entrepreneurs in that. But yeah, I wanted to take a step back maybe for a second, Ryan, and just share another reflection, which is that I think some entrepreneurs approach us looking for financing and in fact are not a fit for venture. And I want to affirm that that is great. That is more than okay. And I'd say most businesses are actually not appropriate for venture capital. It's a very specific tool for a specific need. And what I mean by that is that there are business models out there that might be proven or place-based and localized, and not looking to scale to a global market or replicate an innovation or have a specific technology that they're looking to commercialize. And that's okay. And there's other forms of finance that are better suited to those business models. But if you are an entrepreneur that has innovation and technology in the heart of what you're building, and you're wanting to scale this to a large geography or market, then venture might be a good fit for you. Another important question is, of course, are you looking for more than money? Are you looking for advice? Are you looking for connections? Venture capital is not inexpensive, and it does require, as Allison pointed out, an opening of the boardroom or of your cap table, so that you're now having a co-owner in the business. And that's not for the faint of heart. I think there are some founders where that is exactly what they're looking for. And they have this, I'd say, like a curiosity growth mindset that wants to have different ideas and influences in the corporate strategy and direction of the firm. But if that's something that you would prefer to have tightly held within your team, or even just as an individual, that again is great and more than okay. I think it's about going in sort of eyes wide open around what a venture capital firm or an angel investor might shift in terms of the direction and engagement at that strategy level. For Raven, we are a minority investor, so we're certainly not looking to control companies. We want the founder to lead the direction, but we are an advisor, we are support. We want to be actively engaged in growing the business and supporting and managing some of the risks, such as around cash flow and fundraising and go to market. And so that's just something to think about as you look at what types of capital are the most appropriate for you. And this is probably really elementary comment, but it might be helpful for someone on the call just to reflect on, I think, some key questions to go through as you're thinking about, do I need to raise debt, equity, grant funding, or focus on building profitability and reinvesting through cash flow, is really, how much money do you need? How quickly do you need it? How will the money be used? What stage is my business at? Is it an idea? Are you revenue generating? And what are the expected results from that financing? Is this going to get you to net profitability? Are you going to be cash flow negative for the next 5 years? What does that will dictate sort of what types of financing might be most appropriate. And I will just offer up, if anybody wants to have a chat with me about your specific venture, I'm happy to have a one-on-one or connect you with someone else on the Raven team.
Thank you for bringing that and bringing that up. I think that's really important too. One of the other things that I've heard sometimes, you hear people say things like venture is bad or good, or like debt and grant funding is bad, or it's usually the right tool for the right job at the right time. And so building a better business, and going back to the first question around like, like how are you going to make money, right? Like often like those, like having that cash flow mindset early on, especially when you're probably, you're not usually going to see venture capital or angel investment on an idea stage at this point. And so like there's usually some work to be done in that. And the better the business that you build, the more options you have later. Because often early, you don't really know. Like maybe you think it's a small idea and it's a huge idea, or maybe you think it's a huge idea and it's a small idea, but that's okay too. And then you just make another decision based on more information. So I think that leads really nicely into the next question around what does a funding roadmap look like? The right appropriate options best suited to business goals, but also maybe stage as well too. Allison, do you want to jump in on that one?
Sure, yeah. Again, something I never had and didn't know was a thing until I was like, I need to figure out what I need, how much I need, where is it coming from? I'm like, oh, a roadmap. Yeah. So I don't think it's ever too early to begin building a funding roadmap, or just kind of identifying where you would like to get your funding from. I think Devin mentioned some really cool or contextualized really well in the beginning, like the 4 options that there are. So my advice to people is always to kind of look at what's out there and then get in where you fit in, or where you feel most comfortable. So if going the venture route in terms of talking to investors and pitching doesn't seem approachable, it doesn't seem appropriate to your stage of business, that's okay. You don't need to start there. I'm always a fan of money that doesn't dilute your company, meaning like you're not giving up equity or ownership in your business. Even though it may be a bit of work, there are grants, there are pitch competitions, there's programs, there's things you can do that don't necessarily involve going the traditional funding routes. And that's fine. That's a really great place to start. In fact, I would say if building a roadmap, starting with a program might be really great, or finding a resource, a tool, a template, like something that, or someone even that can help guide you through the process of building a roadmap, or even just letting you know like key milestones, what you should be looking at, the length of time you should be dedicating to like each stage or each goal is really helpful. And I wouldn't say that there is a specific blueprint, like there's a tried and true, like this is how you do it. It really depends on your business, what your sector is. Like Ryan said, like you may have a really big idea and think this is amazing, this is the next big thing. And it actually might be, it might not be, but irrelevant, right? It doesn't matter. What matters is you having your goals in sight, understanding where you want to be, and then starting to think about how you're going to get there and what pools of money are the money you're going to use to get there. For me, as mentioned, I love grants. I love a program because I like the networking. I love the camaraderie, especially programs that may have a funding element attached to it. And at Spring, we have tons of programs, but I would say if you're first starting out, we have a really great program, asynchronous. It helps entrepreneurs kind of look at the landscape of fundraising and just like all the options that are out there to start building a roadmap. Andrea on my team can actually share a link to our essentials program. And what I love about it is it's designed to take what you need and leave what you don't. So it's not, it costs nothing. There's nothing in it for anyone other than you hopefully stepping away with a better idea of what the next steps are. And then that kind of helps ladder up to other programs. Spring has these programs. Other companies have them as well, where you're actually going through the process with a cohort of learning, building your roadmap, identifying the key milestones, and then hopefully accessing funding or capital at the end of the program. But I say all that to say there really isn't a right or a wrong way to do it. It's just understanding what your goals are and then finding the right types of funding. And it can be a mix of things. So at one stage, it may be a program that has a grant. A next stage might be traditional debt financing where you're going to a bank and you're like, you know what, I just need a loan to get me to the next step. And then the next stage may be going to friends and family and asking them for money. Then you may be back to a program and then you might talk to investors. So there really isn't a wrong way to do it. I would just say do it in a way that feels right to you and that you're taking on risks and whatever you're doing aligns with your bandwidth and your capacity to manage the process, because money is not free. So there often is a lot of work involved. So just make sure that it's aligned with your goals and it feels right. And I think you'll end up where you need to be eventually.
I love that. And going back to where you said there's no blueprint for funding, I think that's so true, because I've seen us try to do it so many times to say like A, B, C, and D, right? Like this is how you do it. And like you just, go from here to here to here. And it really does involve continuous learning to understand and navigate some of these things. And it can be frustrating at times as well too, but it's also super interesting. And once you start to figure out like what's going to work for your business, it just, it gets easier and easier. That first little bit is always the hardest. And so there are some great programs out there. Like, there's the Essentials in Startup I'm seeing here in the chat. We've got I think our second cohort is already done for the New Ventures Indigenous Founders program that we piloted this year, but there will be additional cohorts coming as well too. And we often just help connect you to others in the ecosystem as well, depending on where you're at and what you're looking for, what type of domain you're in. Amazing. Devin, what would you like to share on that one? What are your thoughts on the blueprints or funding? There is no blueprint, but the funding roadmap for folks that are pursuing investment or trying to support their goals?
Yeah, maybe I'll just offer up a couple guiding principles, and I'll put my contact in the chat if you want to get a little bit more specific with any outreach. Happy to chat offline. I think one principle, and Allison hit on it really well, is like, what is the minimum capital you need to raise? And very much focus on keeping that number tight and limited so that you preserve your equity on the cap table, which can support you in follow-on financing to retain ownership, as well as for us at Raven, it's very important, and it's a key part of our impact that we see through our strategy, is that there is wealth creation created for the founder, that there is a really successful commercial exit for that founder, and that's creating this windfall of wealth that then is passed on to their children and the next generation, and so that we are in a place where there's friends and family to support that next generation of founders. So that's a really big part of what we discuss with founders that approach us, is what is the right amount of financing, and then what is the right sources for that. And typically it's a combination. And so often if you are able to raise equity, debt funders will come in alongside that round, and that augments what's possible. And some of those debt funders might be groups like BDC that I mentioned, and banks, as well as there are some, I'd say, more innovative solution providers in the debt space, particularly for software companies like Coho Growth and Bonsai Growth are some examples that if you maxed out other sources of debt and other sources of funding, they are other ways to bridge cash flow gaps that are kind of appropriate to a technology venture. And then there's kind of more classic supports like Shred, which provides tax credits on R&D spend. That's super important to leverage. Alongside, I know in BC, and I'm sure New Ventures could share more about this than I could, but different opportunities in funding jobs created in BC, particularly for if they're around training or new hires. there's a lot of funding available for that. And I know, Ryan, you've got lots of intel on Indigenous internships in particular, which is awesome. And we often are leaning in and supporting our portfolio companies to upskill Indigenous talent and not only bring them in at entry levels, but throughout and up into senior positions in the firm. So that's one comment. Another I would say is just generating revenue early on in operations just gives you more options. It gives you flexibility, it gives you autonomy, and resources to pivot. And so even this morning was participating in a pitch contest, and it was the theme was femtech, and it was a medical device company, super interesting device, but it's going to be many years until they can bring that device to market. And in the interim, they're launching an app to create buzz and sort of a interim solution to the problem that they're solving for women. And so I thought that was a really innovative way to bring in revenue today, while their beachhead market and ultimately where they're going to see their commercial scaling is in the medical device. So there's really interesting ways to create like virtuous business models that get you some early traction and like an adoring customer base, and bring in these champions that can then inform future product iteration or new go-to-market channels. And so, yeah, just think creatively about how you can generate revenue early, because that gives you more options. And the last thing I'll share, if you are raising equity, is to be thinking about your next phase of financing. And I know that probably sounds like really exhausting, because I hear you. It's a lot going to the market and raising capital, and it's not easy. And I hope that you're seeing some and meeting with investors that make you feel like you're valued and that they're learning something from you, because they are, and that they're meeting you in a way that's with good relationship. And we try and do that at Raven and be really relationship centered, share meals. And we don't ask entrepreneurs to pitch on the first meeting. It's much more important for us to just get to know you as a person. What's important to you? Tell me about your community and your family. And then we can talk about business. And so I hope you're finding those types of partners in the ecosystem. You should certainly be looking for them, or at least ones that align with your values and what you're looking for and who you want to spend your time with, because that's the other thing. Equity is like a marriage. It's not a term loan that you just kind of at the end of the loan, you pay it back and you're done. It's like it can be a 5 to 7 year or longer relationship. And so really ask yourself if you are enjoying spending time with this individual or this team. And are you getting value from it at every stage? You should be seeing value before they invest. And so back to what I was saying about kind of where you want to be in 18 to 24 months in your next raise, that should be in your sight line when you are pitching to investors, because that's what they'll be asking. And so they are mapping out not only what your capital can do today, but where your venture will be in 18 to 24 months, and then even forecasting past that through to exit. So to the extent that you've done some key assumptions and thinking around what are the drivers and levers of growth to get you to that next stage, everyone knows it's going to be different than it actually your plan is presented. But the fact that you've articulated what needs to be true shows that you've done your diligence and you understand the market, you understand what it takes to take the product to the next level. And that goes a long way in creating conviction for an investor around your growth path. So just an encouragement around sort of think about those, let's say 3 to 5 key milestones that you want to hit by your next stage. And you can even talk to investors that are later stage about what they're looking for. What are the benchmarks they have around ARR or client retention and churn, or whatever sector specific benchmarks might be at play for the company that you're scaling? That can be extremely valuable and also allows you to start that relationship early with that investor, because down the road you'll be likely needing to raise capital from additional funds as you grow.
Devin, there's so much there, and I've been putting two words in my head so I can remember things. And one is clock, and the other is pie. So if I forget, please remind me of pie in a moment. I think one of the interesting things there is that the clock starts ticking once you take venture. And I think maybe that was kind of part of what is like the venture funds have their own constraints. And so a venture fund is usually running on a 10-year term, and their job is to return money and profit to investors. And so everyone sees these venture funds as being these big, powerful, entities. In reality, they answer to other investors that have invested in them. And so they have to like deliver just like a startup on the thesis and what they say they're going to do. So, that return is within that 10-year period. So it's important for them to see that you're thinking about the trajectory, because once you start taking it, you're usually trying to scale your business. So you want to like do the things that you wanted to do so you can prove the model better, or show like unit economics, or like something, just show that you're ready for the next stage. And so that you can then get to that stage and grow and accelerate it. Because really what venture is trying to do is accelerate the growth of the business and get outsized returns, because it is risk capital. It's like the riskiest kind. And the other piece I remembered, pie. To your point, I think when we look at investing, or we look at taking in investment as a company, we think, how much can I get, right? And what we sometimes are missing, like if you think about 100 pieces of pie, and if you say like I'm going to make this $100 million business, then each piece of pie is worth $100,000. So that is a big. So when you start to look at it in that way, you realize that the best be a pig. Right, the most pie you can get. Don't be a pig. I think money is meant to be spread around. There's times when it makes sense to give up equity and things like that, but do it strategically and think about trying to leverage it. And I noticed, Melanie, you've got in the comments here about like the funding mix and having more sources. If you even raise very early, like $250,000, but you've got approval for, say, like BC Ignite, which is a $300,000 grant programming. Well, now you've got some matching funds from that. And then from there, you can go to the bank and they'll give you some funds. And so you can really start to layer on those options. And one of them usually can lead to leveraging other options to give you more cash flow. And then if you're timing that with, generating revenue, then it puts you in a much stronger position and better valuations, which are always nice. It means you have to give up less of the pie because people see your business as being more valuable. We've got some great questions. I can't really take credit for any of them because I have to admit that I was lazy and I chatted with the folks and said, I've added some in and made some adjustmts, but there's some great ones here. So can you maybe tell me a little bit more about, Devin, let's swap it up. Let's go to you first and then back the other way, just to change it up a little bit. What do investors look for?
Yeah, I'd say that there's two sets of kind of things that investors look for. The first set are what I would say are common across investors, and second are more, let's say, idiosyncratic or specific to the investor. So just talk about what's common. I'd say like team is a very, very important area that venture investors will look at closely. In particular, at the earlier stages, it becomes even more important because that's usually and possibly all that you might have. And within team, I guess I could expand and share, like you're looking for someone who has vision, grit, has capacity. And this is something that comes up, I'd say, a lot for us in the ecosystem that we serve, is that founders may have a number of businesses on the go. And I understand that. I can appreciate that. But it's hard for a venture investor to align around that, and they will likely ask you to focus on one. So just something to keep in mind. Of course, things like integrity, coachability. Do they have a meaningful chunk of the cap table? Sometimes we see businesses where the founder has been unfortunately prematurely diluted by a number of investors, and that can be a red flag because there isn't necessarily enough incentive for the founder to build value and stay long term with the venture through to exit. And so that's another area to look at. Aside from team, on the commercial side of things, Depending on the stage of the company, different performance metrics will be examined and by the investor, but market size is one that will always be looked at. Traction, what kind of momentum do you have around sales growth or any indications of, if it's a waiting list or beta customers, anything that can communicate that there is this, whether it's a hockey stick like growth or at least a steep growth path and momentum around the revenues of your business. And profitability, I'd say that this is more of a focus in recent years. We've sort of kind of fallen off the cliff of high valuations. But some of that is stabilizing, but I would say the market is still recovering from, I'd say, after the second half of 2022, when we saw that drop. And so that has led to an increased cost of capital and a growing focus on net profitability and margins by investors, and just not growth at all costs, but how are you able to show that there is a viable path to profitability for your business? And that's also a function of sort of the macroeconomic environment around inflation and interest rates. Differentiation and moat, scalability, alignment around valuation, what's the financial condition of the firm, how does the balance sheet look, is there a lot of debt that can't be serviced, or is it something that we can work through? And of course, exit strategy, as I mentioned, is something that venture investors will have in mind. And who are you looking to sell to? Is it an Indigenous acquirer? We're seeing a lot more economic development organizations participate in private transactions, and that's like super exciting to see. And we're certainly actively working with some of our founders on those types of exits, while other founders want to sell to a strategic, a large corporation, or someone who would really align around their assets and their team, and absorb that, and it would be a very lucrative exit for that founder. So it really depends on, and it's a question to ask yourself, sort of what would be your ideal exit. For some of the founders we talked to, having that intergenerational legacy of handing over a company to an Indigenous owner is very important. And so we also look at self-liquidating instruments at Raven, where a founder may be able to buy back equity at an agreed upon price over a certain timeline. And that will, again, provide assurance that the company retains Indigenous ownership over the long term. So definitely ask these types of questions of investors and understand there can be some creative solutions outside of what are the more traditional exit pathways. And then I just share that impact is another area that I'm glad to say is increasingly a focus for investors, some with more authenticity than others. But and I'd say, ESG is just it is an area that's getting a lot of tailwinds and support, even in the regulatory environment, particularly in Europe. And so I think we're recognizing that climate risk and social unrest are, and among many other human rights and other issues, are becoming material to business. And so investors will be looking at those areas as well. But in terms of just briefly on idiosyncratic or investor specific questions, depending on their thesis, like do your research, look up online, who have they invested in, what do they believe about the future, that will reflect kind of who they want to invest in, and whether you might align with that, and how they're able to bring in advisors and support behind you. But it can vary very, very widely based on sector and thesis. So I would encourage you to do your homework, talk to folks in the ecosystem who might know them. And of course, if you can get a warm intro, that's even better. But I think the Canadian ecosystem is quite small, so someone has to know someone. And so definitely reach out to myself or others on the panel too. I use LinkedIn extensively to find out who knows who. And the Indigenous Tech Circle is just another great resource for enabling that kind of homework to be done.
Thank you for reminding me that. I'd be remiss if I didn't say, if you're not involved with Tech Circle yet and you think it might be a fit for you, please. Oh, have I turned off my video? There we go. I didn't even know. Have I not been here? So yeah, if you're not involved with Tech Circle and you think it might be a fit, if you're an Indigenous founder, please reach out to me. You can also go to jointechcircle.com. The other thing I love to do on these sessions is there's a wealth of knowledge here, whether it's a peer, there's a lot of, I've noticed a lot of other funders and ecosystem folks on the call. So if anyone's open to it, please share your LinkedIn profiles in the chat and just sort of say, hey, on this call, would love to connect later and start connecting with each other, because there's a wealth of knowledge right here, and you know, let's take these ones away and build relationships. So so much that I heard on that one. And I thought, like, one of the things that kind of jumped out, I started thinking about, is that we, in line with a lot of those in terms of what investors look for, I noticed that people are really excited about technology a lot of the time with no commercialization plan. And so it's almost like the flip on the investment side, where it's like, hey, you know, do I believe this on the innovation side? Cool. And then you really want to know about the, you know, the commercialization strategy, how you're going to go to market, how you're going to make money, like what kind of traction you have, is it a big enough market? But the flip side often with the founders is sort of, so maybe just like switching hats when you're talking to investors and trying to understand kind of like how they make decisions and what they need in order to be able to make an investment for you. Allison, what would you like to add to that one there?
I mean, as per usual, Devin just knocked out the park. I think the only thing I would add is that investors are looking or considering you. So I often hear from investors that as much as they're investing in your business and the idea, whether it's tech, climate, they're also investing in you. And if we look at the statistics related to how many businesses actually succeed versus those that fail, especially in the startup world, more businesses fail than succeed. But that doesn't prevent investors from investing, and that's because they're looking for people that demonstrate a lot of the qualities that Devin mentioned, that, you know, you are solving for an impactful solution. Perhaps you're aligned with like UN SDGs, ESGs, all of those things. Those all matter. But I've heard investors say that, you know, I'm gambling or willing to take a bet on this person or this founder team because they have what it takes. They have tenacity, they have grit, they're smart, they're creative, they're innovative, they're impactful, like they're bringing a lot to the table. So if this idea doesn't work out, all good. A lot of investors they're fine to hang out and see, you know, maybe what's something else you have cooking. And if they're not going to invest, they can refer you or connect you to someone else who may invest. Because the reality is that not every investment made will generate a return for investors, and they know that. In an ideal world, it would, but they know that they're not going to make money on every investment. So as much as they are investing for a return, they're also investing in people. And when it comes to Indigenous founders specifically, one thing that I've noticed that I I don't know, it kind of dawned on me more recently than it has in my years and years of coaching founders, is that Indigenous founders specifically have a different and unique way of looking at whatever the situation is and approaching business. And I feel like that stems from a lot of cultural practices, being more community minded, looking at community actualization as opposed to self-actualization, thinking several generations ahead. Those are characteristics that not every founder brings to the table, but it's almost inherent or just comes naturally to a lot of Indigenous founders. And that's such a superpower. So when I think, if I put my investor cap on, if I were to look at an Indigenous founder compared to another non-Indigenous founder, obviously I'm looking for all of the things that Devin mentioned, right? Traction, are your numbers in check? Do you have a great team? All of that matters. But then I'm actually going to look at you and say, well, maybe you have learnings, teachings, practices, ways of just living and going about life that other founders don't, that actually make you, I'm not going to say easier to work with, I would say better to work with, and just perhaps bringing solutions and ideas to the table that other founders won't or don't, because they don't think like you. So that's kind of the only other thing I would add, is that investors are looking at you, and so lean into who you are and all that you bring to the table, because it's definitely part of your superpower.
Yeah, and you are who you are, and that's great too. And when you show up as yourself, you get aligned with the right investors and everything else. That's beautiful. And to add to that, it's a very funny thing with investment, because it's a weird, venture's weird, right? Like, we want you to spend the money. We want you to go for it. We're not looking for you to like preserve, you know, like, sure, we want you to be prudent with what you do, but it's this weird thing where it's like, we know it's not always going to hit, right? And that is okay. Like, and people will repeat, if they watch you and they see what you do and you do it with integrity and you go for it and you have that grit and you do everything you can, then sometimes that fail is a win, and that people are more than willing to invest in you the second time. So it's not like, you know, win or lose, pass or fail, one time option. It's a relationship. Andrea, and I hope I'm not screwing up. Yeah, Andrea, please join in the conversation. Yeah.
One thing that I wanted to say is I worked for Future Capital, the company that was acquired by Spring. And as we're talking about what investors kind of want to see, like physically you, like one thing that we noticed when we were fundraising, like the founder and CEO Marlon, it's like he's going to their breakfast, he's signing up for the newsletter, he's going to the webinars, all of those little things, because these people remember, right? They remember seeing you, they remember hearing your story. Do you know what I mean? And just kind of connecting. It's not just like the networking piece, but a lot of the times, like you were saying, like with connecting on LinkedIn and stuff like that, now that we're kind of in the post-COVID world, it's like physically getting yourself out there, because a lot of the times like an email or this can do a lot, but just having that 2-second conversation or introduction physically in front of someone can change a lot of things. So it's kind of just like when we're looking and doing fundraising, it's like we were out there hustling and trying to go to every single little thing that you kind of see pop up in the ecosystem, to kind of just, if someone remembers your face, they remember your name, little things like that. And it just makes that whole intro and that whole connection a lot easier.
Amazing. Yes. Yes. Getting out there in the community, getting known, and just showing up. Sometimes just showing up consistently and providing value. Like, how can you support the ecosystem as well too? People notice those things. That's amazing. Okay. So now you're going for it. You're doing venture. You're in. We haven't scared you away. Now, what is the typical process look like in terms of getting to a yes and having due diligence done and that sort of thing, and actually having a check land in your bank account? Yeah, Allison, do you want to lead us on?
I can start. I feel like Devin can definitely summarize this so eloquently and lovely, probably way better than I could. But I'll share what I share with founders that I talk to, and I do base this on my experience. So I think one thing that you can definitely expect or even prepare yourself for is just sharing a lot of information. And the most efficient way to share this information, of course, is in writing, like documents, a paper, like something in writing, right? You're not going to regurgitate and speak all the information that an investor wants to know. So in terms of the process, one thing, again, that I wish I knew was that a data room exists and it has a purpose, and there is a way to document and organize all of the information. An investor may need to do their due diligence and research on you in order to make an investment decision. So I would say, like, the first thing you can expect from the process is to have to share a ton of information, and it makes sense in the very beginning to document everything and keep it as organized as possible. And I'm talking from financial projections to pitch decks to information about your team, if you have supplier contracts, anything that demonstrates research, validity of the business, all of the wonderful things Devin mentioned earlier in terms of like what investors are looking for. Try and have that all documented, or document as you go. Keep it simple. It doesn't need to be overly complicated. It just needs to tell the truth and show investors quickly and succinctly the information that they're looking for. If they need more, they'll come back to you and let you know that they require more information. Don't worry, investors are not shy about asking you to do more work. But once you have all of your information, you can definitely expect kind of like what I guess they would teach in a program, where you'll have the opportunity to pitch. And I'm not talking about like a 3-minute, like, hi, my name is Allison, and like a very simple pitch. You can expect a long form pitch. In fact, I saw a really great, really professional pitch as part of an angel network that I joined. And when they were giving the parameters, they said, you know, everyone's going to have 20 minutes to pitch. And I was like, 20 minutes? I was like, that's ridiculous, because we train founders to like do it in 3. So you can absolutely expect to be sharing your information, but like a long format pitch for the investors to then deliberate, to ask you questions, to go back and forth, to look at the documents. In fact, you can expect multiple conversations. If you can pitch once and get the money, love that for you. Don't know if that'll happen. And once you have these conversations and you're sharing the documents and the investors are asking questions, one thing I found really helpful is to have your document somewhere that's traceable. So you can store things in like Google Drive, it's all good. But there are platforms that enable you to track who's looking at documents and how often people are looking at documents. So something like Carta is really good for that. And I love that because I found with my data room, the documents that investors were looking at, like I would see like this document's been viewed 40 times. I'm like, either it's really good or it's really bad. Like I was like, let me get in there and like see what they're looking at. So if you can kind of keep track of who's looking at what, I think it helps you just to understand like what information is resonating or where you may have to improve. But beyond the pitch, beyond the documents, beyond the questions and all of the chit chat, there is the tough conversation about numbers, about the valuation, about how you've valued your company and how you've articulated this to investors. They're going to poke every hole in your theory. They're going to ask you every question. They're going to try, I'm not going to say to discredit this valuation, but they're going to want to fact check why you think your business is worth, $1 million, 10 million, whatever number you've put on it. And they're going to do their homework. They're going to do their research. They're going to compare you to other companies that might be of similar size, traction, same industry, just to see, like, is this apples to apples? Are you kind of valuing yourself at what other companies are based on several factors? And then finally, I think if you get, obviously this is just a very abridged version of it, because again, this path isn't linear and can look very different depending the investor in your business. But I think once the due diligence is done, once the questions have been asked and answered, and investors do feel confident in what you're putting forth, and they do make the decision to invest, I completely underestimated the timeline to close. I thought it'd be like, oh, they like me, they're going to give me money, I'm going to have that money in the bank, we're all good. Oh, absolutely not. It was just like never ending back and forth questions, especially with like, how are you receiving this money? What are you spending this money on once you have it? How are you allocating funds? If you're like, I'm going to spend $10,000 on marketing, they're like, okay, I want an itemized list. Like, how are you getting to this $10,000? So I think, not to scare anyone away, but I'm just sharing that to say, as prepared as you can be in terms of documentation, like you can't be too prepared. I promise you that. You cannot be too organized. Start documenting, start thinking about these things early on. And if you're getting questions from investors that you can't answer or you're not prepared to answer on the spot, that's okay. But what I would do is keep track of those questions or even commonly asked questions and start like a frequently asked questions doc. So an FAQ document where you can start, writing down the questions you're getting all the time and writing a really nice succinct answer, linking any reports or anything that you want to link to it, and just keep adding to it. So it's like a living, breathing document. It's always being updated, and having that in your data room or however you're sharing information, because that will mitigate some of the like boring, repetitive questions, because you're going to get asked the same questions over and over and over again. But I would think Devin can jump in with some more of like the technicalities from what, say, like a fund or like a firm would be looking for, because I don't really have real money, so I'm not the best person.
Actually, that's a really good point as well too, in terms of like a couple of things. I heard you say like it's, if you can get a check right away, that's great. And so I think it is understanding it's a longer term process. Venture folks are smart too. They want to see you over time and see everyone can show up one time and well, not everyone, but some people can show up one time and perform really well. Some people show up one time and perform poorly, but then over time you get to like build a relationship and see. So I think that was a really interesting thing to draw out, that it is going to take time to get there. And Devin, I know Raven's got a unique process and is very focused on working with Indigenous led founders. So I'd love to hear a little bit more about your thoughts on this.
Well, Allison offered up a ton of goodies with that response. I love how tactical you were, Allison. Just underscore everything that you said. I mean, I'll just offer up very briefly some other things to think about in terms of process. One is that, like, don't be afraid to ask the investor what their process is, what you can expect in terms of timeline under each stage. It's important that they are held to account as much as you are being held to account in the diligence process. And that's so that you can run a process yourself. And I do find that if you're able to, as a founder, have that data room ready, have that list of funds like ready to go and intros kind of unlocked, or these are folks that you've already developed relationships with, but you're now at the point where you're like, hey, I'm ready to raise, like, I want to tell you more. It's really helpful when you're able to communicate to an investor what your target closing date is. You can kind of generate some momentum around that raise and even some competitive dynamics with firms providing you with a term sheet. I definitely would say that all venture capital firms have to prioritize their pipeline. There are many opportunities coming through their doors, but if there are reasons for accelerating one above another because of a tighter timeline or a competitive process, they will prioritize you first. And so to the extent that you can communicate a sense of urgency and a structured process and follow through on what you say, that's amazing and will serve you really well. And I'd also say one other point, because Allison just did a phenomenal job of covering this topic, is just around investment structure, because it does impact the process from start to close. In particular, if you are early stage and you're raising a lower amount of financing, let's say it's under 500,000, safes and convertible notes can be a great structure to go forward with. They're also an advantage not only in terms of speed of closing and like the reduced amount of legal paperwork and costs associated with that, but they can also allow investors and entrepreneurs to align around valuation, kind of kick that down the road through having, let's say, a valuation cap. That essentially is a way in which that the safe or the note will convert at a subsequent price round. And there's some features to the note or the safe that basically incentivize and benefit that investor to participate today. So there's a bit of a discount applied. And so that is a way in which to get a deal across the line much faster than if you do a priced round, which has much more paperwork. There's a whole shareholders agreement and transaction documents. And sometimes those legal fees can be, upwards of 50K or more. And we've seen sometimes almost double, maybe more in the US. So it can be a huge bite out of the overall use of proceeds. And so convertible notes and safes are a great way to go. Yeah, that's all I would add.
Amazing. Yeah, and to your point of doing due diligence on the companies and running your own process. So where's the fund at as well too, right? Because anybody that says they've got a venture fund up doesn't mean they're actively deploying capital. Doesn't maybe they haven't even raised yet, right? So like, are you pre-raise? Are you deploying capital? Because funds have their own life cycle too. So asking those questions, learning who has funded companies like yours as well too, and really developing getting to know who you want to have on your cap table as you're going about it as well too, and then just are they able to, depending on where they're at in the cycle of their fund too. So much there. And I just saw legal fees, another thing. Yeah, absolutely. And safes and the convertible notes. It's expensive and it takes time to do a price round. Devin, I'm seeing something up here. Are you seeing Canadian VCs lead rounds more than in the past?
So I'll speak from my experience, which is of course limited to me and my firm, but I'd say when Raven started 5 years ago, we were leading almost every round. And often we're the first institutional capital in. And as we build the company and the valuation and the opportunity, we're able to bring in like-minded co-investors. What I'm seeing more so now in the last even just like 18 months is non-Indigenous funders participating and leading rounds, and we are following. And I love to see that. That's really exciting for those founders that are looking for that type of cap table mix. And so I think it's just a testament to the fact that the ecosystem is seeing that Indigenous innovation has this unique value proposition And there are these unique business models and innovations that are being brought to scale. One example is Crux OCM, which we participated in the summer. It's the largest Series A financing by an Indigenous woman founder in Canada, of our knowledge. That's in like the optimization SaaS space, and Microsoft led that round. And so I think we are seeing quite a bit of shifts around this kind of seed stage and up part of the landscape, which is great. And I know, Ryan, you're chipping away at the pre-seed side of things, among others like Josh Nilsson. So that's really awesome to see too, that there are, more and more players coming into the mix.
Amazing. Allison, anything you'd like to add to that in terms of leading rounds in terms of the Canadian ecosystem?
No, but I loved hearing that there are more and more folks stepping up to lead rounds, especially for Indigenous founders that may not be Indigenous themselves. I found that in the early days, and by early days for me, I'm talking about 4 years ago, but still in 2020, when I was learning, like, what is a lead investor? What does this even mean? And when I was speaking to investors, a lot of people were very hesitant to get on board because they're like, well, who else? Like, who's interested, or who are you talking to that's like their name carries weight, or the fund they're representing carries weight. They were always like so curious, like, who else is involved or interested? And I was like, why do you care? If you want to support me, just let's do this. But then I quickly realized that's not how things work. So nothing important to add other than I'm glad to hear that more people are stepping up, and it shouldn't be incumbent upon us to be the leads in investing in people who look like us or come from where we come from. While that is lovely, I think everybody needs to step up and get involved. So love that.
I'm being aware of time. We've got about 14 minutes left here. And so I just want to make sure if anybody on the chat here has any questions that they'd like to get in, I'll just open it up here and see if we have any questions come in, and I'll give it a minute. We'll give a pause, take a minute for a breath. Let's see if anything comes in here. Maybe not. Maybe it's over going once, going twice. Okay. Maybe let's just close up with some final thoughts, and like, if you, what is it? Oh, wait a minute, hang on a second. Any good tools for building a business plan or a deck or anything like that? Several from BDC, just looking for any additional options. Yeah. Maybe jump in if anything's popping to mind here.
There is a tool. I'm gonna check my email. I cannot remember the name. It slipped my mind. I used it as an advisor probably like 2 years ago. I'm gonna check my email to see if I can find it, and I'll put the link in the chat. But essentially, I don't think it really hinges on AI, but it has sections, you answer questions, and then it so eloquently lays it out for you. Let me hop into my email and find
Is
this.
it live? I'm doing a search because I thought,
Yes.
is it Live Plan?
It is Live Plan.
Live
There
Plan,
you go. Yeah, it is Live
Yeah.
Plan. And again, there's a fee for it. So I'm a big fan of free, but if you're at the time or the spot where you're weighing like build versus buy, my money versus my time, I didn't find it overly expensive, and I found it really easy to use, and that like I had zero onboarding and just hopped in there and started helping people, and I really like how it laid everything out.
And also, not Crunchbase, what am I looking for? Oh, Jesus, Product Hunt. You can probably Product Hunt might be an interesting place to look because there's a lot of new AI tools that are coming out. So if you start searching on there for stuff, you might find some that are in beta, and they might give you some good information as well too. So I always like to go check things out there and see what's available too. Anything to add on that? Anyone else got any other neat tools or tricks or tips? All right. Well, maybe we'll just end with some closing thoughts and just sort of what would you want to know? If knowing what you know now, what would you want to share or sum up kind of for anyone that's thinking about going the venture route? And Devin, do you want to lead us off this time?
Oh, sure. Although I love having Allison go first because I just get this like amazing energy and like ideas pop in my mind her great reflections. But yeah, just thanks so much for the time today. I think we're all learning, and I hope that you've been able to learn something today. And please reach out. This community is stronger with you in it and your voice heard. And yeah, I've certainly learned quite a bit from what's been shared and what's been like happening in the chat. Really looking forward to following up with some connections there. But yeah, I think one message I would offer up is don't be afraid to ask for help. Don't be afraid to ask really good questions, or any kind of question, or question that you think might be kind of silly. Actually, there really are no bad questions in venture. And like, just ask for what you need. I think that it shows that you are strategic, that you are focused, you're ambitious, and you know what you want. And so just, put yourself out there, look for mentors, be curious. I think of one founder, and I just love seeing her star continue to rise, is Chelsea at Anine. She was the winner of the powwow, or sorry, not powwow pitch, the Bear's Lair. And she's just someone who's like very unabashedly herself and honest about the mistakes she's made over the last month. She'll share them on LinkedIn, and she creates this community that is just so like of champions and supporters that were won over by her honesty and her ethic and her passion to grow a really successful Indigenous brand. And so I think of her, I think of many, many other founders, whether they're in climate tech. I've met so many amazing Indigenous innovators in BC, in this province, in BC, as well as across Turtle Island. And it's just a true honor to be part of this movement that is underway, because the future of tech is Indigenous. I really truly believe that we need to change the way we not only fund ventures, but what ventures, how they commercialize, how they build inclusive businesses, who do they staff, who is at the leadership level, what types of, like, not only the product, but how is it being applied, and is that in a way that is in line with Mother Earth and the well-being of all people. And I see those types of values so strongly in our portfolio and in the founders that I have the chance to get to meet. And so really just, I hope that this is just like, raising my hands to you, all of you on the call who are founders, and to the ecosystem providers that are here to support you. This community is a huge one, and one that's growing, and yeah, looking forward to future conversations. And Chimigwech, Ryan, for hosting. It's been great to be here.
Thank you. And actually, you just reminded me, yes, absolutely, on asking for help. I've got a post that I've been holding off posting on LinkedIn on just that. It says asking for help, I think, is the beginning. It's a very original, and thoughtful title. And so I'm going to put that out after this, if anyone's interested in learning some of the things that I've found helpful for how to ask for help. Amazing. Allison, final thoughts?
Yes, asking for help. Ask. I think what kind of towards the end of what Devin was saying really resonated, which was seeing a lot more companies embodying and demonstrating what it means to lead, but with considering things like Mother Earth and cultural and traditional practices. And I really, really love that, because I guess my biggest takeaway is, for a long time, I felt like I had to conform or fit into a specific box or conduct myself in a specific way to be taken seriously, to seek validation, to be considered, to be invited into all these rooms and spaces. And I was wrong. And, the more that I leaned into just being myself, the more doors opened up for me. And I was like, okay, there's something here. And as I was getting into these rooms and spaces that are coveted, that I wanted to be in so badly, when I got in these spaces, I was like, oh, it's not all it's cracked up to be. And I always hear this, like, the saying of like, or the question of what do you bring to the table, or, I want a seat at the table. And I was like, actually, I don't want a broken seat at a broken table. I'm more than happy to chart my own path and essentially create my own destiny. And I always encourage founders to lean into that. There's nothing wrong with disruption. There's nothing wrong with being a troublemaker or being labeled a troublemaker. I think if you're staying true to yourself. And so not to let, I guess, opinions of others influence you, or even think like, oh, I see everyone doing it this way, so I have to do it this way. Because on one hand, yes, if something is tried, true, and tested and it works, and you don't want to reinvent the wheel, then don't. But if you really feel like this doesn't work for me or this doesn't resonate, that also is true. And I encourage you to just lean into trusting your instincts and your gut and do the things that have always served you well. I can honestly say that I almost always do that all the time in my life. And the one time I didn't was the first time I secured investment for one of my first startups. And it was one of the worst experiences, like for real, one of the worst experiences of my life, mentally, physically, emotionally. It was just awful. And it was honestly because I wasn't true to myself. It had nothing to do with my lack of knowledge or like lack of trying, lack of effort, because as entrepreneurs, we know we only work. That's all that there is. There's work, right? You're making dinner and checking emails, or you're on a call while you're driving like kids to a thing. Like it just always is happening. And so in order to protect yourself, because there's a lot going on, I just feel like in that instance I reference, but just always staying true to yourself is the best thing that you can do. And as Ryan said, ask for help. There are people who will be more than happy to lean in and support you, especially people like myself, like Devin, who are saying we're seeing more and more people who look like us, who come from where we come from, entering this like founder and startup landscape. So reach out to us, reach out to people who you feel comfortable reaching out to, who may have come from similar backgrounds or look like you, whatever it is. Reach out to those people and ask for help, because I think the insight and wisdom that they have to share can save you a lot of pain and heartache and sleepless nights that I went through.
That's amazing. Showing up as yourself, and like hearing no is a beautiful thing when you show up as who you are and you're very clear about what it is that you're looking for. It's okay to improve performances. Sometimes we have a bad performance. Sometimes we maybe don't get things across like we would, but as long as we're being who we are, and if people are saying no because of that, that's great, because you probably don't want to work with that person anyways. So that's amazing. Andrea, anything you want to share before we jump off here? To hear any final thoughts you have?
Like again, just coming from working for a startup very, very, very recently, it's just like everyone's saying, just put yourself out there, stay true to who you are, and surround yourself with the people that you know are going to be in your corner and have your best interests in mind. And it's always something that's like you don't have to give up who you are in order to make this business succeed. Sometimes it's just going to take a little bit longer than expected, but that's okay if you're truly doing something that you love.
This has been so lovely. I've really enjoyed having the opportunity to sit here and just listen to your wisdom and also just how you show up as well too. It's wonderful to be here today, and thank you so much. And I guess I'll close with, you heard it straight from Allison, go out there and create some trouble. So thank you so much for your time, everybody, and yeah, have a fantastic rest of your day. And please reach out to me if anybody wants to, and I know everybody else's LinkedIn profiles have been added in there. And please make this the beginning and start some relationships today from the people that you've been chatting with and listening to.
Thank you.
Thank you, everyone.